especiales. Es Ross Gerber, presidente y CEO de Gerber Kawasaki Wealth y también Investment Management. Ross, thank you so much for being in Negocios Televisión. It's a pleasure as always. Good afternoon, good morning for you.
Yes, hola, good to see you.
Ross, you're a big Tesla investor. Tesla has gone up 155% this year. But just 2 days before this interview, we know that Cathie Wood, also a big Tesla investor, sold more than 51,000 shares of Tesla for about $13 million. Do you think it is time for Tesla to stop going up?
Well, if you look at it over the last year, actually Tesla isn't up over the last 12 months. So a lot of this gain we've seen this year is just a rebound from the lows that it hit in December of last year. Tesla is a long-term investment for us. And so the idea of selling Tesla right now, seems a little bit premature considering the future looks so bright for this company over the next 5 years. So for us, we manage to an allocation. So we might buy or sell the stock on a daily basis depending on each client. But in Cathie's case, she is heavily weighted in Tesla and she might be lowering that weighting, but I wouldn't overthink the moves that Cathie Wood makes with her stock trades on a day-to-day basis. But long-term, she's been a long-term shareholder, same with us, and I don't think that's changing.
Days ago, Tesla surged almost 10% after Morgan Stanley said Tesla should be viewed as a tech company as much as an electric car maker. It said its new price target at $400. Do you think that this is feasible, that Tesla could go up to $400?
Yeah, I mean, Tesla can go up indefinitely if earnings go up and the company continues to execute. I think, it's pretty funny that it took Morgan Stanley so long to realize Tesla was a tech company when we've been saying this for almost 10 years now. But that said, earnings for Tesla are expected to decline this year to about $3.50 a share and then rise next year to about $4.75, maybe $5 a share. So Tesla is a very high valued company today. So for it to get to $400 a share, we need earnings to meaningfully grow over the next several years. And that's really what ultimately drives stocks, including Tesla, is the growth in earnings. So we do have a very bright future with Tesla and we'll have to see. But currently the stock is definitely trading at a rich multiple.
Tech industry, Ross, these few months, the last few months, AI industry has been surging in the stock market. Yesterday we saw a great IPO for ARM, but at the same time Nvidia's CEO is selling shares of Nvidia. Do you think that this marks the end of the rally of AI and chips companies?
No, not at all. In fact, this is just the beginning of the long-term effects of AI on the technology and cloud-based systems that are run by so many of the big cap tech companies. This is one of the most exciting themes. And in my investment fund, GK, on the New York Stock Exchange, we invest in AI and chips and technology. It's one of the sectors that we've been focused on for quite some time. So this is just the beginning, and we're now seeing some incredible opportunities arise with many of the players advancing, putting AI into their software products, and what the potential is for this long term is massive. But I think Nvidia CEO sold a few shares. He's got to pay his bills, and that's how these people are compensated. They're compensated mostly in stock. So when I see small stock sales like this, it seems like a big dollar amount, but he's one of the richest men in the world. So actually, that's just like paying his bills.
Speaking of ARM, the IPO has been a success. We can say that because yesterday we saw the stock go up almost 20% sometimes. In the last 12-18 months, there barely has been any IPO in Wall Street. Do you think that this might trigger more filings from other companies that want to take their companies public in Wall Street?
Yes and no. I definitely think it was great news. It reaffirms that there's plenty of capital out there and that the bull market is alive and well in the United States here. But I think that what we're seeing is only the best, most profitable issuers that are backed by really good people are going to be able to go public. So I don't think we're going to go back to the days of 2021 where lots of companies came public that were not ready to go public, that were very overvalued, and investors really suffered from the class of 2021 IPOs. So I think these are very high quality IPOs and give investors who want to be involved an opportunity. Granted, this is run up, and so we tend to wait and have these stocks settle back into a more reasonable price.
Do you think this is now the time to invest in companies like ARM, despite the surging of 20% yesterday?
Well, we don't own ARM and we didn't buy it, but Nvidia owns part of ARM and really wanted to buy out all of ARM just a year or two ago, which failed. So just the fact that Nvidia was so interested in buying all of ARM makes me very confident that the assets and the chips that they're designing at ARM are very valuable to the ecosystem of the tech ecosystem long term. And so I think ARM is a good investment, and I think it's highly valued now because it's rallied from the IPO price. And I think investors who are patient and wait for a stock like this to pull back, I think it's a great company to add to portfolio. Granted, we have not done that at this time.
Ross Gerber, President and CEO of Gerber Kawasaki Wealth and Investment Management. It's always a pleasure to have you here. Ross, thank you so much. Have a good evening and have a good weekend today also.
Yeah, you too. You too. Thank you.
Bueno,